Good morning, trading world. It is September 6, 2022, 7:05 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. I trust everyone had a happy Labor Day weekend. Getting down to business. To close out last week, we ended with more selling, but the VIX doesn't really seem concerned by this, and this should really concern you. We watched the VIX fall to a low of around 23 on Friday, but end up back around 26. And some may say the VIX looks plenty woke to them, but let's take a deeper dive into VIX. You have different volatility index for shorter and longer term VIX. You have the VIX 9-day, which measures the expected 9-day volatility of the S&P 500. You have the VIX, which measures expected 30-day volatility of the S&P 500. Then you have the Vix3m, which measures expected volatility over a constant 3-month period of the S&P 500. Then we have Vix6m, which measures volatility over a constant 6-month period in the S&P 500. Now, tracking the Contango and backwardation of these VIX products, we get two important clues about the market. First, what is Contango versus backwardation? Contango is a situation in which the future price is higher than the spot price. This is somewhat the natural state because there is always greater risk that lies in the future because no one knows what the future holds. Backwardation is a situation in which the future price is lower than the expected spot price. Now, if we go over to product depth in Thinkorswim, it can show us whether a product is indeed in Contango or backwardation. All right, this is a chart of the Vix Futures, and you can see that we're completely in Contango, as the first contract that's listed here is the October futures contract, and then higher and above that is the November futures contract, and then above that we have the December futures contract, and then way above that we have the January 23 futures contract, and so on. But the future contracts are all priced higher than the current spot price. So this is a great example of Contango. Now let's find something that's in backwardation. All right, now we have light sweet crude oil futures. And as you can see, it is in backwardation because the first contract that we have up here is the October, which is higher than the next contract, which is November, and so forth and so on all the way down. And then you can see it gets crazy where it looks like maybe later back here in December that the contract may kind of get a handle, like trouble may be over with then, but you start to kind of get out of trouble a little bit back here. It looks like in December, the CL Z26 contract versus the ZL Z27 contract. So this is an example of backwardation. Now let's get back to the clues that tracking contango and backwardation can give us. The first key clue we get from tracking contango versus backwardation is if the market is still in contango, then the market still sees risk further out in the future, while backwardation says we are in the eye of the storm now, not later. So as with the crude oil futures, that market is in trouble right now. Now the second key clue is that if we find ourselves in a strong backwardation, like how crude oil is, where Vix 9-day is greater than the Vix 3-month, the Vix itself, and the Vix 6-month, then of course we are in the eye of the storm. But the inversion back to contango means we probably hit or are near a bottom. Now this is not a perfect system for discovering the bottom, but nothing is. Now going back and looking at Vix Futures in product depth of just comparing the Vix series kind of tells us we are nowhere near the storm yet. Alright, here we are looking at the Vix Futures contract again, and as steep as this curve is, it tells us we're not near the storm yet. However, it doesn't take long for this to flip around. One thing about Vix Futures, we can cruise along and everything will be okay, and in the drop of a second, things can shoot up to crazy proportions. So it doesn't take long for this to change at all. Because if you've been following me for a while, I talk about how professionals have to dynamically hedge. And at some point when they start dynamically hedging, they're going to have to reach for everything they can, and there's going to come a time where we're going to sell off the edge of a cliff. And when they do, that hedging is going to continue, and then they're going to reach for Vix calls or a lot of puts, and they're going to keep reaching and keep buying puts and keep reaching for Vix calls, and it's going to shoot up really crazily and almost instant. But for right now, the way the contango is on the Vix, it tells us we're nowhere near the storm yet. So right now, we're on the Gulf Coast, and who knows if the hurricane is 50 miles out or 200 miles out. all we can do right now is enjoy the breeze and make use of the wind by flying a kite or something. But just know there is a storm brewing. All right, here we are with the key levels of the day. On the resistance side, we have our jack resistance at 394 to the 395 area, which also, if we start to break above the 395, we have some room to run, and we could really start to get going to the upside if we break above 395. Our queen resistance level is going to be 396 to the 398 area, and then our king resistance area is 399 to the 406 area. On the support side, we have our jack support at 391 to the 390 area, our queen support 389 to the 388 area, and then our king support 387 to the 386 area. The main thesis for today is bullish, closing above the 392.24 with a projected target high of between 393 and 404. Our alternate thesis is bearish, closing below the 392.24 with a projected target low of between 391 and 386. The current major channel we are in is 397 all the way down to 379. The major channel above is 397 up to 416. Now, with all the unsettling things I just talked about regarding VIX, there's still maybe a bullish pop building right now that hasn't completely played out yet. But who's to say that this bullish energy doesn't just play out with a couple of pops up and a majority of sideways action? I don't like first days after a holiday weekend when the futures market still opens briefly. It sets up for either a big gap and or possible leftover order flow in either direction. And that's exactly what we have building now, a big gap to the upside. So with all that being said, let's get to the scenarios of the day. Before I get to the scenarios, I almost forgot to touch on the weekly outlook. And our weekly outlook, it is bullish as well, with a possible retracement of around the 400 area at some point, or maybe a couple times this week. All right, our first and most probable scenario is going to be our trend day up. We open gap up and start with a fade back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We find our midday chop around the possible queen or king resistance area, and then usually the second half of the day, we usually start with a head fake out of the lunchtime chop, looking to continue the main trend of the morning, but at some point we get a fade going into the close. Again, that's our trend day up day structure. Let me bring up the next scenario. Alright, our next scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop around either the possible queen or king resistance area before spending the same energy we use going up to come back down the second half of the day. And per usual, we have a vice versa alert on the rounded reversal day type structure, which could look something like this, where instead of a continued push up, we get a continued push lower. That continued push lower will probably take us somewhere down around the jack or just below the jack support area. We find our midday chop either around that jack or queen support area. And then the second half of the day, we would go up with a similar force that we came down with the first part of the day. So that is our vice versa alert on our rounded reversal day type structure. All right, our third and last scenario is going to be our expansive range day structure. We could have an initial pop overnight and close to the cash open, find resistance, and then chop lower back toward the support of the overnight lows. Then begin at some point later in the day to reverse and push the boundaries that we've set up above. And those boundaries are going to be that 395 area. So we could begin to push up above those later in the day. So the key about the expansive range day structure is at some point we're going to close below that previous close and usually cross it at least twice. So those are the scenarios that we have for the day. As always, you want to be careful because there is some bullish energy build up, so that we could see a decent pop, but be careful. Don't let the bullish energy and pop lull you to sleep as to what is really going on. As always, your first and most important job as a trader is to protect the capital that you already have, and we do that by knowing and understanding the risks that we have on in each position, and we manage those risks based on our account size. So again, I hope that everyone enjoyed the holiday weekend. And before it slips my mind, later this week, I may be absent. I have a conference that I will be attending the 8th, 9th, and I think the 10th is the weekend. But I will be attending a conference, and I haven't quite figured out the logistics of being able to do everything as of yet. But there is a possibility that there may not be a pre-market for Thursday and Friday. But we'll cross that bridge when we come to it. As always, wishing you all a positive trading day. Hope you have a great one.